Alright, so hello my good friends, Doug here with LincolnList.com. This is Midday Market Mutterings for the 7th. I tell you what, I need some coffee here, but I want to ask you guys a question. Have you ever felt like you did everything in your power to avoid every opportunity possible? Like you just were so afraid of opportunity that you just did this perfect little dance around every opportunity that showed up. It's like you didn't even want any money, right? You didn't want any money. That's like my trading day today. Sorry, but I got to get some coffee. It's just been one of those days. It's just like I just didn't even want to make any money. Like I was against it or something. So we're going to talk about some of these trades. Going to talk about some of the stuff that I left off of with yesterday, because if you remember in Market Mutterings, the one thing I said I didn't want to see is I didn't want to see like that big gap up. I'm like, don't do that because it robs up so much value out of the market. It's cool if you're overnight swinging. That's great. But if you're day trading or something like that, then it just puts you in a bad position. So we're going to talk about this. Got to try with a couple of different camera angles here today in the new office. So we will see what we can get ourselves into here. I'm going to go over a couple of ideas. Still a little bit of time left, so I'm going to put you guys down here for just a quick second. See if that works out for you. Does that work out? That's pretty good right there. Okay, so let me introduce this. I went with selfie stick today. So there we go. That should get us through. Now, let's talk about this market. The thing gap ups don't do anybody any good in most cases. And I'll tell you why. Again, if you're swinging, investing, it's a whole different scenario. But if you are a trader, that's not really what you want to see, because here's what happens. When you get a gap down day, people want to buy the gap, or the consensus overall is to BTFD, buy the dip. And that's where your max value is, because everything gaps down, flushes into support, and then it rallies. And that's how you get that red to green move. That's how you get all these big time high alpha plays. When the market gaps up, nobody wants to sell, but then the prices are normally so high that nobody wants to buy. Now, why does that make a difference? Is because it's difficult to pull off a short, because once they've gapped up that way, it's hard to get any sellers, and it's hard to make the risk to reward case in shorting scenarios. So in 90% of the cases, gap up days just suck if you're a day trader. You don't want to see that. You want to see washouts, flushes, and then the red to green moves. Those are your big days. And that's what this market did. That's what I said. Don't do that. Don't gap up over top of resistance. Allow us to get in, especially this BABA. We'll talk about this BABA here. I have a little position left, but this is what I'm talking about when it comes to trades. I talked about this yesterday, breaking. Take a look at the bottom chart. I talked about this yesterday, breaking this area of resistance, which I think was 197. So my plan with this trade was to get long roughly around 197. Maybe it would test 196s or something like that, right? So my plan was to get long there and then try to make that trade from 196 to 200. Well, it didn't quite work that way. So like when yesterday I said sometimes plan A works out, and that's cool, and we have to appreciate that, because in most cases that's not how it works. As a trader, you have to adapt. So one thing I don't do is I just don't buy gap ups. I don't do that. And I'm not saying that's not a great strategy for people. If you found a way to make that work, then good for you. But in most cases, for me, that has turned out to be horrendous results. I've done terrible with that kind of stuff. So anyway, I had to wait for a washout. Luckily, we got one. I mean, I'll give it that. That was a lucky move, and it just didn't go parabolic and ruin the whole day. It pulled back here, and I picked up a nice little trade off of this spike. But at that point, it kind of takes me a little bit out of my element. That's not really my tier 1 type of play, so I have to gear down in size. And that's what this is all about. I just couldn't really get behind that thick move because I hate it. Now, we did this sort of double dip today, and by this time I'm so like irritated, I kind of missed this double dip on this market. So I'll show you. I was kind of trying to pick up some futures here. This is a SPY. Let me open this up. I got a bunch of gibberish on here because I was looking at this thing. So once this thing kind of broke the low, I missed this short on this one because I was messing around with BABA. But I was kind of looking for this thing as it was selling off to trade down into a little firmer area of support. And what I was looking at is if you look at yesterday's close right here, which was like 266.60s, and then you had a pre-market high or a post-market high, however you want to look at that, about 266s. Something like 266, 267. Get another line up here. That's what I was thinking, 266, 267. That I'd want this thing to trade down in there so I could buy the bounce, because I don't chase longs, nor do I chase shorts. So I'm not into that either. And I was looking for that, but this thing just, it pulled, let me just say the word, it pulled a bitch move. Sometimes the stock market pulls a bitch move. It doesn't give you what you want. This is the thing about technical analysis, it's not perfect. It doesn't give you what you want. It comes up short off this cheesy overnight wick of 268, and then just rallies like three full bucks. I mean, what? That's a hell of a trade right there. And I missed the lion's share of that. I mean, I totally missed it because I was waiting for 266s. And again, what I'm trying to get with this is sometimes you have exactly what you're, in this, I'm talking to aspiring traders, struggling traders, those out there that are really trying to make that transition. This is an important element of what it is that we do. In order for you to make money and get the most amount of money, you're looking for the most perfect setup that gives you the edge, right? That's what you want. You want to have the edge. And with that edge, when you get a good risk to reward, you can load in size. You are going to need big size at the right times so you can capture the largest piece of the move. When you're sitting up here at highs of days or lows or in other areas like that, or when things are way too high or too oversold, you're pretty much just scalping for pennies. And that's okay, you got to do that sometimes, but the theory behind all this is you're trying to make bank, and you got to have big size where risk reward favors you, so you only need one or two of these moves a month to pay all your bills. And when you get these gap ups, you don't have that. When they start coming up short of prior supports, or not basing long enough, like not building flags long enough, not building consolidation enough, not establishing serious levels enough, just up and back chop, flipping back and forth. That's the stuff that kills traders, because then they get frustrated. You start doubling down on your sizes, trying to make something happen, and the market just isn't trader friendly. So we often look at stuff and we look at these huge moves in the chart and you say, hey, it went up a lot, it went down a lot, there's a lot of money to be made. And the answer is yes, there is a lot of money to be made, but in real time, you're not moving or pivoting off of any real level. And that's causing problems. That's causing problems. Now, but not every day can be perfect. So as I'm doing this, we're kind of struggling right now to decide whether this is a bull trap or bear trap. Like, what is this that we got going on? This was a nice breakout on that flag. We talked about this yesterday, that the SPY probably has a 280 run in it if it moves above that 263, 264. Well, unfortunately, it decides it's going to just trade $10 above that. Again, that's my beef here today. Just decides, okay, we're just going to wipe you guys clean and take 10 of that off the table for you. Thank you, market. But we did get a nice pullback here. So here's what I'm looking at now. We're trading at 270s, 271s. If we can stay roughly in this area here by the close, there's a chance that maybe tomorrow we could resume and work our way to the 280s. Now, anything above that would be the same translation. If we close really strong today, I'd say 280 is probably something that will be done before the week is over. Now, a close down here doesn't mean we still couldn't do 280. It just means that you're probably going to have to wait a little bit more tomorrow and let the market digest a couple of moves before you get a quality setup. That's what I'm saying here. So there's already been a significant pull. If you got short there early this morning, that was great. I mean, by the time I caught on to it, it was too late for me. But what a pull, 275 all the way down to 267. I mean, there's some sick range in this, but sometimes when you get off balance with your day, you just can't get caught back up. You're just one step behind every move. We all go through that. It's just part of being a trader. The reason I say that, and the reason I'm transparent about that stuff, is because I'm not going to bullshit you guys like a lot of other people do and try to tell you that every day's good and I know all the answers and I can think 10 steps ahead. I'm good at what I do. I'm very successful at what I do. I've done this for a long time, but I'm also a human being and I make mistakes too. And I get I get one step behind the market sometimes. I get off on the market sometimes. Not get off on the market sometimes, but, But it's just one of those things. So let's see how we close. I still think there's a potential for 280, especially if today's close is mild and just doesn't crater at the end. I still think 280 is on the table, so we still have some room between here and that 10 bucks, even if it takes long. Now I want to go look at a couple of names I'm going to throw out here for you. I don't know if they're going to play out today. Where did I put these? I want to talk about this PAYC because I was tweeting about this thing earlier. Because sometimes you got to kind of just ad lib here and make things, make new plans. I'm really watching this thing as a short today. I probably won't do it because I'm not a big fan of it down here, but I'm just watching. First of all, let me tell you, this stock is getting its ass handed to it right now. I mean, it's just selling off. It was 342. It's down about 150 bucks. The last few days that the market's been rallying, it hasn't really participated. Today's the only day that it's participating. Now, sometimes when a bearish stock that has a one-day bounce is just a one-day bounce. Maybe it's strong all that day. It doesn't mean you're supposed to just go gung-ho shorting it on the first day. But it has broken down nicely from 204, and you're just slightly trading underneath of this extended double bottom of 190.30s. If the market starts to get weak into the close, you're probably going to fill in this gap down here, which is 181. So, you know, it's about $9 away. This thing could actually fade. I'm filling a good piece of this gap. I don't know if that's going to happen, but I'm watching. If things do get aggressive, there is a plan or a strategy in place to possibly look at this one. And the theory behind it is it's just up because the market's up. And if the market's not going to be stable or it decides it doesn't want to be at these prices, then this thing is probably going to get hammered at the close. May or may not happen. But right now, there's no trade for me on it. It's just going to need a few things done. So let's kind of watch this one. If not, any gap up or run on this tomorrow, big greens, big moves above the 200s, 205s, 210s, any kind of vert, I would definitely be thinking about shorting this stock. Again, it has to set up. Just because it does that doesn't mean you're going to do it. You have the idea first that if it does that, you will. But then once it does it, you have to look at the pattern first and say, is this part of my trading strategy? Is this part of my plan? Is this something that I'm going to do? Then you govern yourself accordingly. Also, Tesla here might be ready for a run. Tesla, yep, the most emotional stock in the stock market, right? It's like pre-BABA. BABA looked like this yesterday, right? This is what BABA looked like yesterday. And it's just sitting right here. So this let me give you a better price, 562. This 560 up here, take a look at this area right up here, messing around with this today, having a real hard time with this, okay? And just like BABA, what I want this thing to do is just stay here, okay? Please. Stay right here, Tesla. Stay right here. Then just hold this in the morning and then rip through that. Don't do a BABA and gap up above that, and then we have to sit by and see if you're going to retest it. But it's pre-BABA-like, so just watch it. Again, these things are not 100% ready, in my opinion, but they are worth a look. So I kind of like PAYC for a short. That might work out today. And if Tesla can re-gear late in the day, let's say we get a big market rally, and Tesla re-gears, I might long that. I don't know. There's still a couple hours left in the day. And then I look the same thing with WD. I've been talking about this one too. Just a lackluster. This is the crap I hate. You're just stuck inside of this range. It's a joke. You're not going to get anything out of that. And you trading in that, you're just guessing. You're taking away your edge. And that's what we don't want to do. We don't want to take away our edge. That's about all I see right now. I mean, maybe tomorrow you've got a couple of different ideas and a couple of different looks. Lulu possibly. So here's what I want to talk about. Let's just try to make this clean. To me, it really depends on the close. If we have a mild close and we balance out nicely, I would be more inclined to be long tomorrow, looking for longs, trying to stay on that bullish side. If we rally too strong and just start blowing through highs at the close, that's going to start leading me to think maybe short, because now the rally is getting way ahead of itself and we've accumulated all these points. So it's trying to find value inside of that market. That's what we're trying to do here. And it's hard to find value on the gap up day. So we've got to get some more data here. I'm still leaning to the bullish side like I was yesterday. I'm still over here, but I'd like to have more size at the right times instead of just continue to nickel and dime this thing, because that's driving me nuts. And maybe this DOCU was another one we talked about. It's having a red day here, but it's a very mild red day. Maybe there's a chance it comes and makes a triple bottom and has a bounce here at 86. I mean, there's a couple of ideas. But really, today I'm looking at maybe getting a PAYC short off before the close. It's market market contingent there. They're going to need some help with the market. Maybe a bounce, W day. Put W day on there also as a short. Maybe there's a short opportunity to squeak those out at the close. PAYC and W day. Longs, I'd like to look at DOCU. Maybe that doesn't happen today, but going into tomorrow, maybe we take a look at DOCU, and then maybe we take a look at, definitely take a look at Tesla over that level. So it's a good day. I'm going to end up making a couple bucks, but I really think I could have done a lot better. I could have really done a lot better. So anyway, guys, thanks for watching this version of Market Mutterings. Got some new camera equipment coming on the way, but I got to wait like everyone else because everything is closed for coronavirus. So you got any tips, comments, curmudgeoning, suggestions, quarrels, send them my way. Support at thelincolnlist.com. Thanks for watching Market Mutterings. I will chat with you guys tomorrow.